Saturday, June 1st, 4:40 p.m. New York time. Welcome to Winning Wall Street's Money. Since the end of the month, we're starting a new month. I want to go over the higher time frame. So we'll look at the currencies and yields. Big correlation. Here first at the 30-year yield, and the chart is a 20-year monthly. It's a lot of history. So look at the 20 years here, 20-year yield reflects the interest rates. Look at here on the top left. We're not even there. We're not at the all-time high. Don't let someone continue to tell you misinformation. No, we're not. This is back in 2004, 2007. And that was last year. So for the month, we made an inside candle. Again, these inside candles, these yellow candles, I have programmed to represent that they didn't take out the high or low of the prior candle. That reflects indecision of the market. Potential trade signal on a breakout. Federal Reserve controls short-term interest rates. Federal Reserve, aka the U.S. Central Bank. Typically, when the Federal Reserve lowers interest rates, it weakens the dollar. Vice versa, when they raise interest rates, it strengthens the dollar. That's with other nations as well, too. But there's other factors that also could lead to a stronger dollar when people are buying more of that currency for safety reason. There are several countries that have safety currencies. US dollar, Japanese yen, Swiss franc, the dominant one being US dollar, safe haven currency. Why would you want some currency from a country that's not diversified democracy, strong military, strong democratic beliefs, and a safer infrastructure that diversifies the GDP wealth of the nation? It's just putting it all in one asset, and that's to a dictator of a nation. Let's just say there's many of them that might mask themselves as a democracy because they have some kind of parliament. So that being said here, the inside candle, solid body, put into a red, smaller trading range. The likelihood of the U.S. of this year raising interest rates is close to zero. The likelihood of the Federal Reserve lowering rates, possibly. Lower rates, lowering interest rates. Yeah. So you have talking heads making a lot of knucklehead comments. And they haven't done that. They left interest rates on pause. So these are free market interest rates. It's like when you get a credit card auto loan, the rates could be different any single day because the markets have yields that free floating. Okay, 30 years, the longer duration. Look at here, the 20-year. Look at here, the 10-year. Inside candle too, indecision. And the 5-year inside candle. And the 2-year. So again, they're all ending the month. Inside candles, indecision. But when you look at the longer duration, the 30-year, the 10-year, and let's say on the 2-year, they haven't taken out the higher highs, higher lows, still below the highs of last year, but closer to the highs of this year. Yeah, that could be confusing to a lot of people. But again, these are yields that are floating. These are not the Federal Reserve. So when the Federal Reserve does come into lower interest rates, these will move down. But also when the Fed makes comments, statements, that affects these too. Got it? So again, if you're bearish yields, bearish interest rates, think they're going to pause or lower them, there is a stock ETF you could trade that's bullish. That trades inversities. Check that out in my other videos I mentioned. So let's go look at the mighty king dollar. That 20-year history, US dollar index. US dollar index, it's an index of several large currencies, the top three being the euro, the yen, the British pound. So look at this. Here's the low 20 years ago. Of the 20 years of history, the low. Here's the high for the past 20 years. Look at that for the current month. Inside candle 2, indecision. Sure, there's a relationship. Got it? Those yields and the dollar has a correlation. Inside the range of last year too. Here's a high of last year. Here's a low last year. Huge consolidation. But I want to know, and I'll share with you, which currencies, if any, are outperforming the US dollar versus which ones are poorly performing. So note here again, we're inside the range of last year. Here's a high of last year. Here's a low of last year. You could trade currencies. The top 3 of their major currencies. The euro, inside candle for the month. Look at down here. Just like US dollar, huge consolidation, very close to the low of this year. Here's the low of last year. Here's the high of last year. So again, very similar, makes sense. Because it makes up almost 60% of the US dollar, big correlation. Japanese yen, over the past 20 years, here's the high, 2011. This year alone, we're near record lows. So again, lower yen, stronger dollar. The dollar is so strong against the yen. If you have dollars, you might consider taking a vacation to Japan. You get a lot of return on investment. Inside candle for the month, yep, much closer to the low of the year. Oh, this is wrong too. We already took out the low of last year. Let me remove that. So again, it's trending strongly down. It's below the low of last year. Okay, let me actually put this year. There we go. That's this year. Oops, that'd be high. So my concern is we're down here, had a big move down, impulse move down the prior month, inside candle now, getting a long wick up there. Potential reversal. Yep. So again, if we get break below there, stay bearish. Again, if we're going to break above, I would not want to be in my bearish positions anymore. If we break above this inside month, let's go on to the next. The British pound. Here's a high of last year. Here's the low of last year. And just like the euro, both European currencies. Huge consolidation phase. So again, it's the yen that is extremely weak against the US dollar. The Australian dollar, same thing. Look at that. There's a high a few years ago up here, trending down. And it's in a huge consolidation between the high and low of last year. Canadian dollar, look at that. Here's the highs from the prior years. And again, inside candle. A lot of indecision in currencies. And the Swiss franc actually broke below the low of last month. It's trending down off the high. The high was last year up there, and it's trending down. This being a safe haven currency, the money's not flowing into them. And the Mexican peso against the US dollar. So when this trends up, it's stronger Mexican peso against the US dollar. Yep, nice. Past several years, I've been sharing this to be bullish Mexican peso. Inside candle for the month. We already took out the high of all these prior years. Huge volatility that last month. Understand Mexico's having elections. United States is having elections this year. Mexico is the largest trading partner to the United States. We want to work with them, not against them. And the Chinese yuan. Here's the low of this year. Here's a high of this year. Here's a high of last year. Here's the low of last year. So again, when this is trending up, stronger dollar against Chinese yuan. Again, we're strong. That's nice. And Bitcoin. Here's a high this year, making it higher. Sorry, lower highs, trending down. A new low there. There's a low for this year, but again, the momentum is down. Higher lows. Sorry, lower highs, lower lows. Want to get access to my video or notification when the next one's out for free, you can subscribe to my YouTube channel. If you want to get to the same day, I have a Patreon link. The link's below with a lot more content available on my Patreon page. And if you want to make a donation one time, I have a PayPal and Venmo. Links below. Thank you as always for spending just a little bit of your time with me. That's it for the video. Thanks for watching.